In today's video, we're going to take a look at examples of when it makes sense to short new highs. We'll take a look at both examples of 52-week highs, along with something as simple as a 5-day high, meaning a shorter term high that we're looking to short and capitalize on some sellers stepping in. I'll also show you a long side setup inside of Etsy, which employs taking advantage of a similar idea, but this time for the long side support by the dip type of idea. Let's start with the short setup first, and to show you an example, I'm going to start with State Street. Now, State Street was one of those stocks which appeared on our stock Volatility Box live scanner. This is a live scanner, a custom one that we've built. It's more powerful than anything inside of Thinkorswim. It scans every 2 seconds for new volatility setups, and you'll see that State Street here appeared on our live scanner, breaching its short side entry. I apologize for that yellow. But if we take a look at this on Thinkorswim charts now, price breaches are aggressive Volatility Box models. This green wick is when we first see it on the live scanner. Now, when we're looking for shorting new highs, I've found it useful to start with these larger time frame charts first. And you can even start with something like the daily time frame. The first thing I'm looking for is an excuse to short. I want to see some reason that you would find sellers up here, past times where you've seen weaknesses. Now, in the case of State Street, you can see all of these wicks here, multiple wicks. That to me is a sign we're coming up into what should act as resistance, although this is the third touch, so I would expect price to break through, but not before we see sellers stepping in. Now you can come into something like a 5-minute time frame chart and start to see signs of buyers starting to exhaust. Some of those examples would be long uptail wicks. In terms of technical indicators, we like to see these Keltner channel wedges that tells you price is outside of the 3.0 Keltner channels, likely to revert. So that's another clue or a hint. You had 1 and 2 edge signal confirmations. That's these red arrows telling you that you're officially now in overbought territory, looking for sellers to step in. So now you know you have a volatility edge with our volatility box models. You know the Keltner channels are telling you that price should revert to the mean. You're starting to see the actual oversold signals, and you'll see momentum crosses for the first time right at the edge of that lunchtime hour. Very interesting how that happens. Lunchtime hour ends and that bearish momentum kicks in. If you find this entry a little too late and you start to get signs that, hey, you think this is just about to turn, zoom into something like a 2-minute time frame chart and take advantage of those momentum crosses, but instead of being aggressive, maybe look at something like this, that 1-2 punch setup, which tells you that the bears tried, the bulls tried, and the bears are winning. So that's one way to zoom in if you want to get a better entry. But otherwise, even a 5-minute chart, you see the signs that we keep an eye out for. Very simple, just need to employ it whenever you see these tickers. Now let's practice this one more time on Sprouts Farmers Market. That's ticker symbol SFM, which made a new all-time high today. Now, Sprouts Farmers Market also appeared on our live scanner. If I show you, you'll see SFM, aggressive short side entry. We got that entry when price was breaching its aggressive volatility box models, and this happened after the lunchtime hour. Short side setup. Now, in the case of Sprouts Farmers Market, we see we have a volatility edge here. We know that we've made a new all-time high, so definitely looking to be a little bit more cautious, starting with larger time frame charts instead of directly going to that 2-minute. Now on the daily time frame, if you come into Sprouts Farmers Market, there's really no reason why I think you'd be looking at going short here. We've made new all-time highs, so the closest thing I think you might get is maybe we've tagged a major extension, which in the case of Sprouts Farmers Market, we tagged the 1272, 1618 was closer up to 111.50. So that's a weak, yet still potential reason why you might be looking at shorts or a reason to be going short here. But really, it's that volatility edge along with the new all-time high where you're now trying to take advantage of sellers starting to step in. The Keltner channels tell you that now you should be looking at price to revert to the mean. The edge signal, this red arrow, tells you that you're officially now in overbought territory. And that first time momentum crosses, you can see how price plummets right after that. Zooming into that 2-minute time frame, this is that perfect example of the 1-2 punch setup. Bears try, gather control for a little bit. Bulls try to defend one candle, don't really get much ground before the bears take right over, and this is how you get that early entry. This is, of course, a much more aggressive short compared to the one in State Street, where we had seen price had explored this area before. The last short we'll take a look at was one into the close, AT&T, and take a look at AT&T. Similar idea. This time we're making a 52-week high, so that was the new example. Get the volatility edge. As soon as we get the volatility edge here, AT&T, one of those larger institutional stocks, almost right away you see that selling activity. We barely touch our volatility box models before we see the automated selling activity kick into full gear into the close. Now let's take a look at one long side setup, and this is inside of Etsy. Now I'll start with the daily time frame chart, which inside of Etsy to me very clearly looks like a bearish trend. You, at first glance, shouldn't really have a whole lot of reasons to be looking at longs. It's only when you zoom in, you start to see some oversold confirmation signals. You see price starting to have a double bottom here and starting to look at least like we were filling that gap. We had the momentum cross on the previous bar in yesterday's candle. Now we zoom into that 5-minute time frame in Etsy, and inside of Etsy, we can see price breaches our aggressive volatility box models right at the beginning of the lunchtime hour, just bounce around, and as soon as that lunchtime hour ends, you can see momentum kicks into full gear. I like to call this a W pattern almost that really happens over this 9 to 10 a.m. period. I've shown you plenty of examples now in past videos, and it's after that 10 a.m. mark that you see momentum kick in, and I bet you if you came into that 2-minute time frame chart here, you would see that momentum kicking in fairly close after that 10 a.m. mark here. Really 10:02 is when you first see the momentum, bears try, bulls recover, and after that, no real looking back. So there you have it. We looked at 4 different examples, 3 shorts, 1 long, and I snuck in this long in Etsy mostly because we had an example of making that 5-day high in yesterday's candle and a chance to buy the dip type of setup here with today's activity with a very tight stop below that 52.50. So 3 different short side setups, State Street, Sprouts Farmers Market, and AT&T, which was just an example of an institutional type of symbol into the close, and 1 long side setup. All 4 of these started with taking a look at the live scanner, finding places where you had a volatility setup, and then jumping into Thinkorswim charts to use some specific technical analysis triggers to take advantage of reversals one direction or the other. Thanks so much for listening, and I'll see you in our next update.